Good morning, afternoon, or evening, wherever you're joining us from, and welcome. It's great to have you with us from across the globe. My name is Peace Echeomuha, and I'll be your moderator for this session. Today's discussion focuses on key trends shaping the insurance industry, from how consumers are shopping in a volatile market to what truly drives satisfaction and how AI is influencing operations, especially in claims. The goal of this webinar is to not only share data, but convert it into actionable insights that professionals like yourself across the industry ecosystem can use to understand customer expectations and adapt strategies accordingly. As you must have seen on the flyer from emails or from social media, this session brings together insights from JD Power, a global leader in consumer intelligence, alongside itracks, a technology enabling qualitative research and engagement. So you would meet our speakers now, and joining us first is Leon Bourner, Vice President at itracks, who has worked with hundreds of clients to deliver impactful qualitative research and has played a key role in shaping itracks' qualitative research solutions. Hi, Leon. Do you want to say hi quickly to the audience?
Yeah, welcome everyone.
All right. Thank you so much, Leon, for joining us today. We also have Stephen, Managing Director in the Global Insurance Intelligence Group at JD Power, who leads intelligence around customers, acquisition, sales, and marketing, and has over 2 decades of experience in research and consulting. Thank you so much, Stephen, for joining us. Do you want to say hi to the audience?
Yeah, hi everyone. Pleasure to be here.
All right. Thank you so much, Stephen, for joining us today. And we have with us Craig Martin, Senior Director of Insurance Customer Solutions at JD Power. He has over 25 years of experience in financial services and client experience. He works closely with executive leaders to translate customer insight into real business impact. Hi, Craig. Do you want to say hi to the audience real quick?
Hi, everybody. Great to be here.
All right. Thank you so much for joining us today. Once again, the topic we have on the table is the future of insurance. And we'll be digging deep into insights from consumer behavior and AI. So we're going to begin with shopping trends in insurance, how consumers and customers are shopping in today's market. And the very first question would be directed to Stephen. What are the most significant shifts you're seeing in how consumers are shopping for personal, auto, and home insurance in 2026?
Yeah, thank you, Peace. There's been a lot of changes. In the U.S., we look back over about the last 5 years. So the inflationary episode that started around 2021 really changed the dynamics of insurance for auto and homeowners insurance here in the U.S. and started to affect the premiums that people pay for their insurance in 22 and into 23 and throughout most of 24. And that caused, as you might expect, people to shop more. So we saw in our data that people were shopping more and more throughout 23 into 24. But what was interesting is they couldn't find a better deal. Essentially, every insurer in the U.S. was increasing their premiums. So while people were seeing their insurance was going up, they thought, "Oh, go find another insurer." Well, they went to the other insurers and found that they were increasing their prices too. So you couldn't find a better price. Late in 24 and then through 25, that dynamic kind of flipped. So insurers had taken enough rate that their rates were adequate. They would no longer need to increase rates. Some were even decreasing rates. And we saw that people were able to switch more. But while they were shopping, we saw a couple other dynamics change. One was since 2020, we've seen a lot more people move from quoting on websites to quoting on insurers' digital channels through their apps. So we're kind of still, we don't have a great answer for it here, but why people are downloading and installing an app from an insurer they don't have a relationship with to just go get a quote. And when I talk to leaders at insurers here in the US about it, even they're surprised that why is it that somebody would go through all the effort to put our app on their phone just to get a quote? And they might do that 3 or 4 times because people are getting more quotes now than they ever have. Because they're so sensitive to price, they're putting in more effort to find that lower price, which means they get a 4th or a 5th or a 6th quote. And all the growth we've seen in the last 5 or 6 years in terms of digital quoting has come through mobile apps. And then lastly, we can't talk about shopping and what's happening in insurance without talking about AI. Consumers are overwhelmingly interested in using AI in their shopping journey. We find that for decades, consumers have struggled with understanding what is a really complicated insurance policy and all the legalese that goes into a policy. And they're using AI right now, not just to help them find quotes, but to explain some of those dynamics of what the policy is, what it covers, what the words mean in a policy. And I expect that to continue to grow as consumers are trying to better understand what they're paying all this money for. They're leveraging AI to help them better understand that.
Very interesting. Thank you so much, Stephen, for sharing that data into how consumers are shopping for personal auto and home insurance in 2026. So the very next question, I would like to pass the mic to Craig. How is rate volatility influencing switching behavior and loyalty?
Yeah, I mean, kind of building on what Steve said, premium increases, change in price is one of those key drivers of shopping, but that also drives them to activate and think about switching. And so this idea of kind of driving people in the marketplace, start to consider, again, one increase is probably going to be allowed and tolerated, but multiple increases definitely starts to trigger that. And then if we think about those key customers, again, how do they understand those changes? So one thing we're seeing the tenure of the average relationship go down, which points to kind of long-term switching behavior, kind of that loyalty and advocacy. But there's also this commoditization that's happening. So as people start to look at it, you see all the advertising, you're being told it's all about price. It's all about, that dollars and cents. And so as Steve mentioned, that challenge of understanding it's a complex problem to understand your policy. What does it cover? What are all the nuances and details? When you don't understand that, but then you see price increases and you're told it's all about price and save a few dollars, you're really degrading that and really turning it into a commodity. And so that's a real challenge to the relationship itself, if I believe that it's a commodity and I don't understand the product to the level I need to, then the next guy who offers me $100 savings is going to get my attention and switch, and I'll look at switching that. So we are seeing definitely the relationship is being challenged. What's the core value? And a lot of that comes to trust. It's really, again, that emphasis on price. And again, that natural need to increase price to maintain kind of your business as an insurer. I mean, and obviously as costs rise, you have to raise premiums. You can't not raise premiums, but how do you talk about it? How do you explain it? How do you communicate that it's not just about, the taking more money from that customer, but really understanding their financial situation. So we are seeing that. Really, it's a real challenge from a relationship standpoint, and the switching behavior starts to be driven up when it becomes more of a commodity. Then it's how much is that threshold? How much money does it take for me to say it's worth my effort, time, and energy to switch? And then technology makes it easier and easier to find an alternative deal and an option. If I can do it on my mobile app, I can switch pretty easily. And so those barriers to switching, the factors that historically keep me from moving, are breaking down. So a real challenging time right now for carriers is to think about, again, just driving more people into the market, and then those barriers to changing and switching are reducing.
That is, in fact, a data back to response. Thank you so much, Craig. And it's a good build up to the very next question. The audience and speakers would agree with me that the data which Stephen has shared from responding to how consumers are shopping for insurance in 2026 to Craig's response, it all boils down to research. And I'm going to direct the next question to Leon. From a research design perspective, how do you ensure you capture not just what consumers are doing, but why they're making those shopping decisions?
Yeah, it's a great question, Peace. Many organizations are very strong at capturing, what their customers are doing, but they find often the harder part of the equation and often the more valuable part is really understanding the why, right? So from a research design perspective, we think a lot about getting as close to that moment of truth or those decision moments as possible, because, as part of human nature, the further you get from those decisions, the more you're relying on memory and recall, and we know memory tends to sort of clean things up and offer after the fact rationalizations. So, we see clients heavily leaning into approaches like in the moment feedback, leveraging mobile capabilities like Craig had mentioned, and other quick turn research designs for pulse taking activities like one-on-one video interviews, that are relatively close to those purchase decisions. And where we're actually seeing clients gain a lot of value, and really where many of our strengths lie, is when we can capture that real-time, in-context feedback at scale. Whether somebody's comparing policies on their phone, talking to a broker, or reacting to a renewal notice, you're not just hearing what they say later, you're seeing the emotion as part of that evaluation, the hesitation, maybe considerations and trade-offs, as close to that moment as possible. And the other piece is layering, right? We don't generally, for big decisions like this, want to rely on just one method. So we'll often see clients combine, that in-the-moment qualitative feedback with broader quantitative studies to validate patterns and understand how widespread some of those behaviors may be. So really, it's about trying to connect the dots between depth and scale. But honestly, it comes down to asking the best questions possible, and that's why the experience and expertise of industry leaders like Craig and Stephen are just so valuable, right? It's not just asking a question like, why did you make this choice, or, what did you choose, but, maybe better formed questions like, what almost stopped you? What made this feel more or less risky? What else were you considering at that time? That's where you really start to uncover the valuable aspects and dive into the key decision factors like price, sensitivity, trust, or even maybe just confusion about the buying process itself. So when you put it all together, capturing that real-time feedback and layering the methods and deeper probing as part of your, discussion guide, you get beyond just simply reporting behavior, and you start to understand decision-making in a way that's actually actionable.
Thank you so much, Leon. And I hope researchers in the room takes this as a cue that when conducting research, what is not just your priority, why, what translates into emotions and the reasons for their response should also be kept in perspective. Thank you so much, Leon. And this brings me to the second round of our discussion today, drivers of satisfaction. Shopping is one side of the equation, retention is another. And I'm going to pass the mic to Craig real quick again. Craig, what are the leading drivers of satisfaction among insurance customers today?
Yeah, so at JD Power, we use what's called an index model. And the design behind that is we ask about different elements that go into the overarching relationship. Now, if you think about our model, it's not one thing, it's many things. And how they all work together really comes to drive that satisfaction. So when we think about at that level, things like trust, level of people interaction, digital interaction, the product itself, all those things are working together and kind of come together in many ways. But it really boils down to, in many regards, do they trust you? Do they understand the products and services? How well does that align to their needs? How easy is it to do business? I mean, customers, when you think about, particularly in the insurance space, it's not, a daily interaction. I buy a policy, hopefully things go well, nothing happens. And therefore I'm just paying my policy. I may have some basic questions, but generally speaking, it's kind of in the back of my mind. And so because of that, those critical moments of truth are going to be really important. When I need information, when I have a renewal, my premium goes up, I have a claim, those are those critical moments. So when you think about customer satisfaction, one, it's that trust and confidence on a day-to-day basis. Do I believe they're there? Do I believe it's easy? Are they fair? Are they give me a good price for value? But then there's also when those key moments of truth happen. If I have a problem, if I have a question, if I have an issue, if I have a claim, those, how do you handle those? How do you respond to those? So those get into more of the action-based pieces, even that digital interaction, that's probably secondary in many people's minds, but in many ways, that's the experience someone has with a brand. How do you communicate? How easy is it to access? I want to check my bill. You let me know my automatic payment's coming out. So all those things really go into that client customer experience. So it's kind of, I would call it a layered level. It's like you've got the top of mind. Do I trust you? Is it easy? How do I perceive things? But then I get into the technical things of specific actions and activities.
Thank you so much, Craig. And just to reiterate, you've mentioned trust, you've mentioned communication, you've mentioned access, you've mentioned ease, as amongst others, as the leading drivers of satisfaction among insurance customers today? And to bring it to Stephen, are these drivers consistent across segments, or are we seeing different expectations from small business customers versus personal lines?
Yeah, that's a great question. I think the overall theme, as you said, it is the same, but it comes to life differently when you're talking about a personal lines customer. So for those that don't work in insurance, what we mean by personal lines is you or I are buying insurance for our vehicle or our family's vehicles in the house, versus a small business who's insuring their business, right? The core theme that's the same is understanding. So I mentioned in the earlier question that consumers want to understand the policy. They want to understand what they're buying from an insurer better than they do today. And that really comes out as one of the two leading drivers of satisfaction for personalized customers is, excuse me, how well do I understand this complicated promise that the insurance company is making me? That promise essentially being, if something bad happens, we're going to be there to cover your losses, right? Obviously, it's more technical than that, or people would understand it well, but that's kind of the essence of the promise that they're making. And people want to understand more about the details of that promise. Small businesses, on the other hand, they want the understanding, but they want it to happen in the opposite direction. They kind of want the insurer to better understand their business. You think about like a household, most households are fairly similar. The homes we're insuring, the vehicles we're insuring are basically commodities. But businesses operate in very different industries. One might be a chemical manufacturer that has a lot of risk around the chemicals they're storing and what could happen to those chemicals. One might be a barbershop, faces different risks. So small businesses really want the insurer to understand them and their needs, because I think what's underlying all that is they too don't understand what the policy language is, what it should cover, what coverages they need. So they want the insurer to understand their business so that the insurer can make the right recommendations to them. So that's actually the leading driver of satisfaction in our small business work that we do is, how well does the insurer display to me that they understand the unique aspects of my industry, of my business, so that they can be the best insurer for me? So again, it boils down to understanding. Consumers want to understand the insurer. Businesses want the insurer to understand them, is what it really boils down to.
Yeah, thank you so much, Stephen. And I really agree with that. Across all segments, consumers want to understand. And to bring it to Leon real quick, in your previous response, you had mentioned how beyond just the what, the why is important. Interpreting emotions is important in the research segment. How does qualitative research help uncover emotional or experiential drivers that may not surface in quantitative scores?
Well, this is really where qualitative earns its key piece, because emotions and an experience that somebody may or may not have had doesn't always cleanly show up in a scorecard or a dashboard or a rating scale, right? Quant can clearly tell you something's happening, like satisfaction has dropped or trust is lower or eroding, but it can't tell you why a human is behaving the way they do. And that's where qualitative comes in. It gives people the space to explore their feelings, explain things, dive into their emotions behind decisions in their own words, and more importantly, to show you what they're feeling. A lot of these emotional drivers in insurance are quite subtle. Things like anxiety, confusion, relief. People may not say something so overt as "I don't trust brand X" in a survey, but in a video response or a digital diary, you'll hear things in their voice like the hesitation or frustration as they maybe are walking through a policy document or a renewal process or claims process. And, that texture is incredibly hard to capture in a large scale survey. So, that's why we really lean into the methods that make those emotions come to the forefront, right? Offering features like high definition video feedback and, video highlights, with sentiment and emotion analysis, can really help bring those moments to light. So, when somebody's acting in the moment or with relative recency, you're not just getting a rational answer, you're getting tone, you're getting body language, you're getting context, and that's often where the real insight is. So, another big piece is, we want to dive into uncovering those in-between moments or friction points, the small interactions that maybe don't seem big enough to rate poorly in a survey, but collectively can help to shape the entire experience. So, That's really why we think that qualitative data collection helps to bring the human layer of the data to the forefront and can really help teams understand those emotional and, as you said, the experiential drivers that ultimately influence, the big rating scale scores that you may see in a dashboard.
Thank you so much, Leon. And just before we move to the next round of questions, I hope you're finding today's conversation as insightful as I am, from exploring shopping trends in insurance to the drivers of satisfaction. And now, if you're curious to learn more about itracks technology or JD Power, my colleague Rachel on the call will be sharing links to both itracks website and JD Power's website for you to explore and reference. Like I had mentioned at the intro, JD Power is a global leader in consumer intelligence, and itracks is a technology enabling qualitative research, project management, project engagement, and participant engagement. And if you want to learn more, you can just access the link that is in the chat. To the next round of questions on consumer views on AI in insurance. I mean, AI is a very important conversation anywhere and every time. Right? Technology is reshaping the insurance experience, especially in claims. And to pass the mic back to Stephen, what does the data reveal about consumer comfort levels with AI in insurance shopping experience?
Yeah, when it comes to comfort level, we've seen that the comfort has grown quickly, and we're doing more research throughout this year to keep a finger on the pulse of how fast U.S. consumers are growing in their comfort in using AI to shop for insurance, and then also their experiences doing that. There are some differences, though, across different demographics. We see males in the U.S. are a little bit more interested and have more report that they've used AI more in their shopping experience. As you might expect, younger folks are more likely to say they're comfortable with and using AI in their shopping. By way of example, Gen Z and Gen Y are using AI at more than twice the rate of baby boomers here in the US in their insurance shopping. And I think what's of interest to insurers themselves, the insurance companies, is the more affluent, so those with higher income US households, are more likely to say they have used AI in their shopping journey. So there's an undercurrent here with insurers that they're trying to win the business of that higher value, more affluent type of household. And that's the household that's telling us in our research that they're more likely to be using AI in their shopping journey. Now, what happens when they're using AI is kind of the next question we get. And that is, a person that's using AI when they're shopping for insurance is actually more likely to switch insurers throughout their journey than the person who isn't using it. And that's by a fairly wide margin. So if we think about on the auto side, when we ask people that, did you use AI or not? Among those that shopped, just over half of those who use AI said they switched insurers as part of their journey. Whereas only a little bit over a third of those that didn't use AI said they switched insurers. So it's the use of AI is driving more action while they're shopping too, not just passively getting quotes, but actively finding another insurer. I think part of that is what I answered as part of an earlier question is AI is being leveraged to help them get answers to questions about insurance. And we know that's the leading driver. One of the two leading drivers of satisfaction for personal lines customers is better understanding the policy and what it covers. And when we ask people, while you're shopping, what specifically did you leverage AI to do? And the leading response was asking questions, general questions about insurance. So it's very clear people are using it to better understand what they're buying. They feel, in other words, that the insurer hasn't done enough to help explain what they're buying. And we've seen that in our data for a quarter of a century now, that insurers can do a better job of explaining what the customer is buying. So that consumer is leveraging AI to do for them what the insurer hasn't, in their mind, done well enough. And when they're using that, it's enabling that decision to switch insurers. And lastly here, we do ask, what are your main concerns about using AI when you're shopping for insurance? And tied across all segments of consumers was they have some fear about privacy and data security. They know that AI is learning. While you're using AI, AI is learning from you as well. So they have some concerns around that. And then interestingly, these are people that self-chose to use AI, but they say the tied for data security is lack of human touch, that they don't talk to a human when they're using AI in that part of their experience, at least. I know that we're seeing AI develop more capabilities around empathy and really coming across as a human. So maybe we'll see that come down in the future, that lack of a human touch. But right now, that is a leading concern that people have is, to boil it down again, privacy and data security. And then I'm not really talking to a person. I don't really feel that human touch.
Thank you so much, Stephen, for going as far as providing that context, because it really leads up to the next question. AI, of course, poses a lot of benefits, but it also has its cons. Where does AI enhance satisfaction, and where might it risk damaging trust?
I mentioned earlier the concerns around data privacy and security. I think too, when you the whole concept of insurance is that it's covering the risks that you and your family face or your business face. It's there to be there when you have a bad day, right? And when you really get down to it, it's still a people business. So the fact that your family is being covered by this policy, or your employees, those that work at your business are being covered by this policy, they still want to talk to a human. So some of the risks are that if they don't feel that human touch, they could feel like they're losing some of that relationship with the insurer. Because one thing I consistently hear, even in this day of AI really kind of taking over parts of the insurance business, is it still is a people business. So if I'm losing that relationship, and we hear that at JD Power through a couple different ways, consumers, of course, but also through agents, independent insurance agents. We survey them and they tell us, if I'm losing some of that personal touch from the insurer, I don't send that insurer as much business. If I don't have that conversation with Craig or with Peace or with Leon that I'm used to having over the last 15, 20, 30 years I've been representing that insurer, I'm not going to send them as many of my customers, as much of my business as I used to. So that's some of what's kind of the threats underlying it. And then also just at the end of the day, I don't think we need to focus as much on the threats as much as what's going to make for a better AI experience for consumers. And we held a conference about a year ago on this very topic where we brought together everybody in the insurance ecosystem and AI itself. And what it boiled down to at the end of the conference was, if the consumer or the business doesn't know that they were interacting with AI, they think that was the best human that they spoke to about insurance ever. They think they were talking to Leon about insurance and he was the best person they've ever advised them on insurance, but it was AI. That's the best AI experience you can have. So it comes across as I just spoke to the most empathetic, most understanding, most informed human being I've ever talked to about insurance, and they were great. I would recommend everybody talks to Leon about insurance in the future. That's the end state where we should aim for with AI and insurance.
Thank you so much, Stephen, for that response. You've shared enough about consumer comfort levels with AI in the insurance shopping experience, as well as where AI enhances satisfaction and where it might risk damaging trust. I'm bringing the next question to Leon, and the question is, how can research platforms, probably research platforms like itracks, simulate or test AI-enabled experience before insurance deploy them at scale?
So very clearly, a lot of sellers are moving at a rapid rate to deploy AI. But often we see that the experience side of the consumer, the customer, is frankly sometimes an afterthought. So from a research perspective, we find the goal in a lot of the studies that we get to help with is to de-risk before deployment, right? So one of the most effective ways that our clients find is by simulating those AI-enabled experiences in a controlled qualitative software environment before they ever go live. So for example, you can prototype a chatbot or a claims assistant or a personalized recommendation agent or engine and put it in front of real users to collect data in the moment as they go through that purchasing journey. But instead of asking after the fact, you can actually watch people interact with those AI agents or engines. With it, we can have consumers screen share with stakeholders and decision makers and strategists, that can be observing from the private back room. You can see people walk through a claims scenario or ask questions of the agent. And you can see how these potential consumers are navigating that process And so, what we can do is help to create these guided scenarios-based experience and layer in that video feedback so you can start to measure things like, where are the clicks happening? What does the heat map tell us about where people might be experiencing potential friction points? Then you can also see body language and facial expressions to see, are they trusting the process? Are they expressing confusion on their face? Do they find themselves getting frustrated? Did they hesitate to perhaps click on, the next screen or to go back? And you can even test different versions side by side. Maybe one version is more automated, perhaps another one has a little bit more of a human touch, because as Stephen just said, right, it still is a people business. So, research platforms in a qualitative environment can let you compare and contrast those experiences very quickly and understand the trade-offs, like efficiency and scale versus reassurance, which is massively important in the insurance industry as a whole. And so, what we find too is doing things in an iterative way can offer tremendous value. You can test early concepts, refine them, test again, so that, by the time something is ready to be deployed live and into the market and, into the wild, so to speak, that, you've got a ton of confidence that's already been shaped by real user interactions and feedback. So, ultimately, what we're trying to do is help our clients create a bit of a sandbox of AI experiences so they can, let, insurers and other customer types observe real behavior and emotion and, build that confidence so that when they're ready to deploy to, tens of thousands, potentially hundreds of thousands of consumers and users, that they've got every confidence in the world that they're going to have success.
All right, thank you so much, Leon. I'm super excited because a lot of insights have been shared, and I can see our audience are really enjoying the conversations because we have a couple of them who have already dropped their questions in the Q&A panel. And just to manage their expectation or your expectation, I won't be really asking all the questions. So once it's time, we'll read out the questions and then we'll get responses to your questions. We have one final round, and just before we start, we'd like to collect your feedback. Rachel will be sharing a link in the chat to the very short form. Your input just really helps us ensure we're meeting your expectation and delivering valuable content. So please take a moment to fill it out. It only takes a minute. And so the final round on research methodology and turning insights into action. All of these insights that you've mentioned are only as strong as the research behind them. And I'm going to bring it back to you, Leon. Many of the insights we discussed today comes from one of J.D. Power's insurance studies conducted last year. I think we really want to know how itracks technology supported the research team in capturing high quality engagement and meaningful participant feedback.
Yeah, thanks, Peace. You've raised a really important question, and it speaks to the role that technology is playing in that decision and design roadmap, and how you get to those insights, not just necessarily the insights themselves. So, from our perspective, the focus is always making it as easy and natural as possible for the participants that you're asking to participate in the research engagement, because the quality of the insight that you are acquiring is directly tied to the quality of the experience that they're going through as part of being a research participant. So if people are rushed or disengaged and just clicking through, you're just not getting necessarily like the depth that you might be looking for. So with itracks, a lot of what we're doing and how we've supported Stephen and Craig and J.D. Power in the past is creating more human, more intuitive, natural experience, especially through things like our mobile first design and video-based feedback platforms. So, for clients like J.D. Power, that flexibility is huge because you're often trying to capture reactions and experiences that are very personal and often really complex, right? Like Stephen's mentioned a few times about multiple insurance lines, whether they're personal home, auto, RV, boat, right? Like these are really complex interactions from time to time. And so, we want to make people as comfortable as possible because, things like claims and policy changes and interactions with providers, being able to ask someone to show you what they're going through and how they went through that process and what their thinking was it really can add a level of richness that is really challenging to get otherwise. So, we really want to provide an environment that can support all the different engagement models to help to drive to that, And then there's the back end piece. Obviously, we've referenced, some AI capabilities when it comes to emotion and sentiment and, other AI analysis tools. But, we want to really help with content organization to help teams streamline that data analysis. Right? It's not that long ago that people were thumbing through hundreds of pages of transcripts with highlighters and paper clips and sticky notes and things like that. Frankly, decisions just need to be turned around much, much faster and be much more agile nowadays. And so, we were, very excited that, we've got some great tools on the back end of data analysis to help organize and really get to the synthesis of what people are looking for very quickly, whether that's, searching a competitor, words, teams, key terms, and emotions. So really the technology is meant to be doing two things. It's really meant to elevate the participant experience, which drives better input. But it's also making sure we give, people like Craig and Stephen the tools to turn that input into actionable insights very quickly. And so, it's ultimately that combination that leads to really stronger outcomes as part of the research process and helps to lead to decisions that you can be confident in.
All right, thank you so much, Leon. I think that really just shows how exciting itracks technology is. If you want to learn more, if you want to know more, feel free to check itracks across all socials and also visit the website link that Rachel has already dropped in the chat. When Stephen was sharing about the drivers of satisfaction, the trends, we could see the confidence in his response as he was referencing a lot of data. Which brings me to my next question for you, Stephen. How does rigorous methodology strengthen confidence in the findings for executive decision makers?
Yeah, thank you, Peace. I think whenever you're doing research, you need to make sure you're using a high level of rigor. But I would say, especially when you're interacting with insurers like we do, insurance companies, as much as probably any industry in the world, are data driven. So they're used to consuming data. They're used to questioning data. They're used to maybe not trusting data because they don't know how it was collected. So we very frequently get a lot of detailed questions about our methodology. How was this collected? From whom? How did you find the people to collect it from? Et cetera, et cetera. You ran a model on it. Well, how was that model run? All the details you can imagine we get all the time when interacting with our clients. So it is of utmost importance that we have all the necessary rigor around our insurance research and that we have the right methodology to get to the right answer. I would say that one thing I can there's a million different examples I could give, but one I want to focus on for the moment is we've been talking today about understanding the why, not just the what. So not just what are consumers doing, but why are they doing it? And I've been doing this work for 26 years and 25 of those years in the insurance space. And I would say that if you ask consumers, and Leon touched on this point earlier, why did you do this? Why did you do that? We're always asking after the fact. And as Leon said, your memory can kind of clean up some of the things from the past. And if you've taken psychology classes, you've probably heard of cognitive dissonance. You're trying to explain to yourself why you did something that doesn't really align with what you think you would do. So you have to be careful in your methodology that you ask not just why, but you kind of back into it. So what I do oftentimes and what we do at JD Power is we don't ask why did you choose insurer A over B or C or D. We'll ask you to evaluate all of those insurers on a number of different metrics. And then we'll use a predictive model to say, based on how they evaluate all these tens of thousands of consumers evaluated different insurers on these different metrics, we're going to predict, based on that data, which insurer they chose. So we derive a model that's really accurate at predicting which of the insurers they would choose. Then that model ends up telling us what were the things that mattered in their decision. If we can accurately predict how tens of thousands of people will behave based on their evaluations of different insurers, and what I mean by behave is which insurer will they ultimately choose to get into policy from, then we feel like we understand what's driving that decision. Which of these things that we had you evaluate really matter to you as a consumer, as a small business. And our models are highly predictive of the decisions people end up making. So That's better than just asking why. Because if I ask somebody, why did you choose insurer A over B? They'll say price. But then I'll say, okay, well, what was the price difference between the two? And oftentimes they'll say there was very little price difference. So then why really did you choose insurer A? And you have to go through this kind of like circular discussion. But if you set up your approach right, your methodology right, you'll understand price was important, but even more important was brand reputation. The fact that they provide good service. Even more important than that, we'll find is they've had good service experiences from that brand in the past, or they've had friends or family or colleagues who have had great service experiences and they heard about that service experience. So if you just ask people why they buy practically anything, they'll tell you price. But if you really get down to measuring in an inferred way, in a model-driven way, what they decided, you find out price is important, but not as important as their expectation of the service quality they're going to get, the experience they're going to have, and ultimately that your methodology allows you to get to that versus just asking people and they say, I bought because of price. And lastly, I'll finish with we do a lot of qualitative surveys, as you can tell when Craig and I are answering. We survey tens of thousands of people for each of our projects. When we work with a partner like itracks and we do qualitative interviews, we get to the human side of why people are making a decision. So as Leon has said many times, you see their facial expressions, you hear the intonation in their voice change. And you can ask somebody as simple as a question of, what do you think of when you think of auto insurance? And you get wildly different answers, even across just a few people. You hear some people saying, I don't trust it at all. I think it's a scam. I think they're taking money from people for nothing. And then people saying, it's a great business. They saved my family when our house burned down. They got us another place to live. They replaced all of our belongings. They replaced our home. They took great care of us. So you hear those different experiences, which are different than think of like on this scale, rate this insurer. When you're doing the qualitative work, you get the human element of how that insurer really affected the person positively or negatively. And in my experience of advising executives, I've seen that really drive an executive decision, even more sometimes than the data. So while they're very into the weeds about the data and the rigor behind the data, when you can show a leader that this is the human experience, that can activate better than just the numbers prove A or B or C.
Super insightful. Thank you so much, Stephen, for sharing that. And to bring it to Craig, how should insurers translate benchmark data and qualitative insight into tangible business strategy?
Yeah, I mean, I think building on what Stephen was just talking about, benchmarks are great in that we get a lot of data that allows us to get clarity on perceptions and really in a competitive context. So are you good or bad at certain areas? And then if we drill down on certain groups and subsegments, what's important to different groups and how well are you delivering on that? And then you combine that with that more qualitative element, which is understanding why they think that or perceive that. So it's really that combination, which is you have to understand big picture where you stand. If we just take an aggregate and say, oh, like people like us or don't like us, it doesn't really make it actionable. So you have to understand the context through which, who's saying this, why are they saying that? And then how different is it? Is it really meaningful and important? Again, that gets to our models and this design of, are you filling in key areas and you need to address those first? Or are there kind of add-ons or benefits you could add, but frankly, you may not be driving material change to your business itself. But then it's the actionable piece of, well, how are we going to do that? So we want to improve our digital. That's a big, or I want to improve trust. Well, how? What does that mean? What is that? You have to really start to dive down into what drives that, what elements are there, and then how do you get really kind of into that more qualitative action, like why do they say this, and what do we need to change about that? So I think it's that combination that really is the kind of secret sauce, so to speak, of how do you drive improvement. It's understanding the competitive context, understanding kind of the gaps and the key opportunities. What are your strengths? Even what are the expectations? I think what we hear a lot of times is, again, there's lots of different ways to approach the market and to satisfy the customer. You may do it a different way. It may be through technology. It may be through, what are those trade-offs that you're going to have to make? What are the approaches? What are the differences? How much does your marketing spend? Again, a small regional carrier is not going to have the marketing budget of a State Farm or Progressive. So, how do you change if you want to build trust, if you want to enhance your brand image, how are you going to do that in a way that is relative to your business model? So I think all of those things come together to really help you make good strategic decisions in the context of your business, your client base, your expectations of where you want to go and what do you want to be in the future.
Thank you so much, Craig. It has just been a roll of solid insights from Stephen to Leon to Craig, and I just want to say a very big thank you to our speakers. And to our audience, our experts have kindly agreed to share their email addresses so you can directly address any questions or concerns you may have, maybe the questions we're unable to take here, and we'll be posting that information in the chat for you to reference. If you want to learn more about their projects, their tools, and what they do, you can reach out to them directly. I'd like to close with one forward-looking question from each of you. I'm going to bring it to the audience real quick. We can only take one question, and I see a couple questions already in the Q&A panel. But back to my speakers, if insurance leaders could focus on one priority in 2026 to better serve the modern customer, what should it be? Let's have Stephen go first, then Leon, and then Craig.
Yeah, it's been said for many years, but I think the technology is there now to really activate it, and that's personalization. So leveraging AI, leveraging the data analytics you have in front of you now that you didn't have 5 or 10 or 20 years ago to really personalize the experience. If you think about the customer life cycle of an insurance customer, they may have heard of you through your advertising. Here in the US, insurers, there are single insurers who are spending multiple billions of dollars a year advertising their products to consumers. So you can't drive a mile in the US or turn on TV for 5 minutes without seeing on the road or hearing on the TV a lot of insurance advertisements. So that's kind of the beginning of the journey. I'm starting to form an impression of the insurer. Then maybe it's time for me to go shop. I want to go find another insurer, and I go and get download your app, and I have an experience with your application. Or maybe I call into your call center to get a quote, so I speak to a live person there, and or I think I am. Maybe I'm talking to an AI, but I think I'm talking to a live person about the quote. If I decide to give your brand a try and I buy a policy from you, all throughout that experience, all the way up to now that I have the policy with you, and hopefully it takes a while, but maybe years later I have a claim and I have that claims experience. Each step of that process I just explained, personalizing it to that customer makes them feel more valued. And when a customer feels more valued, they stick with the insurer longer. And any insurer representatives listening to this know that the name of the game of making building a successful relationship that makes your insurer successful in the future in this space is to retain the customer over many years. If you sell a customer and they leave you in a year, you actually lost money by winning that customer. So that personalization can really help with building retention, and retention really is the name of the game to running a successful insurer.
Yeah, I think if just adding Stephen's referencing, lifetime value of a customer and cost of customer acquisition, right? We all know it's very expensive to acquire customers nowadays. And, if you can start to sell multiple lines or multiple services into clients, they tend to be stickier. They tend to be more accepting of price increases and things like that. And so I think from my perspective, I touched it a piece earlier, is there's really no reason nowadays to deploy, an agent like an AI agent or a bot or, a personalized claims assistant, without doing some really rigorous testing to make sure that it's going to stand up sort of to the heat and light of, a real life situation. Because again, having to replace that customer is very expensive, and if you don't retain them over multiple renewals, to Stephen's point, you're not going to achieve that ROI or investment into that relationship. So yeah, from our perspective is, there's just so much available, from a qualitative research technology perspective to help you launch and deploy with such confidence nowadays. There's no reason not to do it.
Yeah. Craig.
Yeah, and I would kind of build on Steve's comments. It's really, in my mind share, and that comes in many forms. But how do you more and more, again, the consumer's life is very complex. You want to get your messages seen, you want to get heard, you want to get recognized at every phase and every time. So it's mission critical to be top of mind and engaged. So without that mind share, without when I have a question, when I have a problem, when I receive a policy increase and my premium's gone, doubled, where do I go first? Where do I ask? And if you're not getting a mind share, someone else is. And so increasingly, not just with insurers, but you've got everyone's competing for your attention and your focus. And so I think, again, in a marketplace that is fairly low touch, low engagement, just those incremental gains in mind share makes you much more, again, it addresses that some of those key points Leon and Steve mentioned. It's customer lifetime value. It's that kind of acceptance of price increases. It's price sensitivity. It's switching behavior. All those things are going to tie back to that impact of personalization. If you send me a personalized message, but I don't pay attention to you, I don't trust you, we're going to be stuck. So I think mind share would be kind of that key term I'm really focused on, of who's gaining mind share and who's kind of doing the right activities to gain mind share, not just through basic activities that everyone else is doing, but something different and unique.
Thank you so much, Craig. All right, we've covered our main discussion points. And like I mentioned before, I did not want to be greedy. So it's time for your question, but I also want to be respectful of the schedule. So we might be able to take just one or a maximum of 2 questions. However, if you have questions, you can file them in. Don't be shy. We're looking forward to hearing from you, and we can send you a direct email responding to your question. So in the Q&A panel, we have someone asking a question that I would like to direct to Stephen. The question says, have you seen a shift of consumers moving to or from brokers to direct insurers?
Yeah, we've seen that in a couple ways. So the fact that quoting through digital channels, so when you think about a direct insurer, what that means is they're selling directly to you. They don't have an intermediary in between them and you. They don't have an agent, or whether it be a captive agent, like a State Farm type of agent, or an independent agent. The growth in direct has been happening for going back 20 years. Lately, it's been happening mostly, as I mentioned earlier, through mobile apps. So it's happening through digital channels. What we're seeing is a decline in, like today, I'm sitting in front of a laptop computer to speak with you. Fewer people are using a laptop or a desktop computer to go online and get quotes. They're using their mobile phone through the applications like we talked about, a mobile app, or they're using a mobile version of a website. And that's where the real growth is in direct. There's fewer calls going to call centers. There's fewer people using a traditional laptop or desktop. The growth in direct has really happened on this mobile device I'm holding in my hand right now. And that's continuing to happen. I mean, if you go down to the individual insurer level, I've spoken to some media outlets, and I've seen data from Austin, from other media outlets that show that there are individual insurers that have for years relied on both the intermediary, the agent, and direct to sell policies. And they're really steering more and more resources towards direct, and they're seeing more growth in direct. So that is absolutely happening, and something I'd be happy to touch base with the person asking afterwards too.
All right. Thank you so much, Stephen. Any contribution from Craig? Leon, there's one more question for you, and then we'll call it a wrap. But any contribution from Craig? Yeah, please.
Yeah, I think just to add to Steve's comments, I mean, for years and years, everyone's been saying the agent's going away, particularly the independent agent, and yet it's still going strong. And I think the importance and impact of agents, particularly I would call it for the more high value customers, has a lot of potential going forward. So helping to understand those more complicated policies, especially in the commercial small business side, there's a lot more opportunity there as well. So, direct definitely is growing, is critically important. And every point Steve made was spot on. I think the important thing is to recognize the impact and importance of human advice and guidance and relationships that agent can provide is still going strong. And so it's an evolution of where advice and guidance really plays a key role. And so how does that, I think we want to, anyone who says it's going to go all online is, Amazon's going to be the only one selling insurance is probably misleading themselves, because it's been said for many years and it's still not happening.
Yeah, absolutely. Thank you so much, Craig. We have a couple more questions, and I'm not being biased to the audience. We will send a direct email to respond to your questions. To Leon, Jeff is saying there was mention of using AI as an analysis assistant, but what about during qualitative interviews? Does itracks incorporate AI in the qual interviewing process? If so, how is it going?
That's a great question, Peace. It's been a really interesting evolution, seeing, these AI tools from sort of, initial birth to where we see them advancing now. And so the answer to the question is yes. We've got a wealth of AI tools for the post-data collection analysis. And, we've got a number of things in beta testing. We've seen a lot of companies out there go with AI moderation, if you will. Typically our strategy and our position on tools like that is that, we're not ever looking to sort of displace or replace the role of a thoughtful market researcher. That experience and that ability to sort of read into things like we've talked about today, sort of body language, angst in the face, and whatnot is just really critically important and can help to layer in so much more value into part of the process and sort of that reach for insights. So hopefully I'm answering the question, but I'm happy to connect with the audience member that's asked it after to show. But there's so much that can be done in the technology. It's almost I don't want to say like you get paralyzed by all the different things that we can do, but very happy to walk somebody through it sometime.
All right, thank you so much, Leon. To those who asked their questions, I would pass these questions to the speakers. They would give us a written note and would send response to you. So thanks to all of you for joining us today and being part of this conversation on the future of insurance. I'm very glad you all found the conversation very insightful, like you've affirmed in the chat box. Please do not forget to fill the feedback form. Shoot our speakers a direct email. It's your credit for being here today, so you're very much welcome. A very big shout out and thank you to our speakers, to Leon Bourner, Stephen Crewdson, and Craig Martin for sharing their insights and expertise. Your perspective on the consumer behavior, satisfaction drivers, and AI in insurance have given us a lot to think about. To our audience, we appreciate your time and engagement. We hope you found the discussion valuable. I'm sure you did, of course, and that it generates new ideas for how to navigate today's evolving insurance landscape. We encourage you to keep the conversation going. This is not the end, and stay tuned. We'll be hosting more sessions like this in the future. We'll be bringing together experts and leaders to explore trends, share insights, and just help the industry adapt and innovate. Thank you once again, and we look forward to seeing you in the next webinar. Thank you so much. Bye.